You probably think that you understand market structure, but trust me, you don't. This video is going to make the difference between you understanding market structure and you actually mastering market structure. You think that you are able to identify the right market structure breaks, yet you keep getting stopped out. Why? Because I think that ICT and all other gurus have really taught you guys wrong. In today's video, I will explain the difference between insignificant and significant highs and lows to break, when we talk about a valid market structure break, and most importantly, the difference between a valid and high probability market structure break. But I think to explain all of this, I really need to get behind the charts. Master the art of market structure and you master the key to a profitable trading system. Let's dive into it. Let's start with the basics. Insignificant highs versus significant highs and lows. What we can see over here are two fake break of structures. What we can see is the price over here is breaking through an insignificant high. Over here, price is breaking through an insignificant low. Now, whenever price breaks through an insignificant high or low, we are talking about a fake break of structure. We can never ever enter a trade upon this confirmation. But you guys are probably wondering, Yip, why is this an insignificant high and why is this an insignificant low? The reason being is that this high over here only brings us to a higher low over here compared to this low that brought us to this high, and therefore it's an insignificant high to break because it only brought us to a higher low instead of a lower low. This low over here only brought us to a lower high over here compared to this high that brought us to this low. So this low is an insignificant low to break. It carries no significance because it only brought us to a lower high and not to a higher high before bringing us to a lower low. Right over here, I have found the perfect example of a fake break of structure that occurred over Bitcoin a few months ago. When we analyze the trend, we can see that Bitcoin is constantly forming higher highs and higher lows. Right over here, it formed a higher high, it formed a higher low, and now it formed a higher high again. You can see how price impulsively broke out over here. So probably a lot of people thought that this was a valid breakout and a valid break of the high, aka a valid break of structure. But we know that since the high over here only brought us to a higher low over here and then to a higher high, and not bring us to a lower low first before bring us to a higher high, that this is a fake break of structure because the high that we break through over here is an insignificant high to break. So the people that entered a long upon this confirmation with their stop loss beneath this low or maybe a pullback long over here, they all got wrecked. When we play the chart, we can see that indeed all of those people got wrecked, right? The liquidity got swept beneath the low. We formed a lower low and then price started pushing towards the upside. Now what we are looking at over here are two valid break of structures, guys. How so? Because this high is a significant high to break and this low is a significant low to break. Why? Because this high over here brought us to a lower low, as we can see over here, compared to this low that brought us to that high. And therefore this high carried a lot of significance and therefore this was a valid break of structure. Over here we can see the exact same thing happening. This low over here brought us to a higher high over here compared to this high that brought us to that lower low. Therefore this low carries a lot of significance and therefore this is a valid break of structure because we are breaking through a significant low and breaking through a significant high. Now guys, compare this example right over here to the previous example that I gave you guys. Once again, we are in the middle of an uptrend forming higher highs and higher lows, but then over here something interesting happens. The price of Bitcoin first pushes towards a lower low over here compared to this low that brought us to this higher high, and then price pushes and reverses towards the upside and breaks through this high over here. Now this high over here this time carries a lot of significance because it brought us to a lower low over here compared to this low that brought us to that high, and therefore this is a valid break of structure. Now if you would enter along based off this valid break of structure right over here, or maybe even up on the pullback right over here, with our invalidation over here, then you're looking at a valid trigger based off market structure. So if we now play the chart, instead of getting stopped out, we can see that the price got filled, formed a higher low, it held the low, and eventually it started pumping towards much higher targets on the price of Bitcoin. Currently with Tribe, we are running something massive for all the people that are watching my YouTube videos. Just to thank you guys, we are currently running a 14-day trial period completely for free You don't have to fill out any credit card information, nothing. You don't have to pay a single dime. All that you have to do is check out the first link that you can find in the description down below, and you get 14 days of premium access to what I think is the most authentic but also the best training community in the space, Tribe Capital. If this already shifted your perspective, just wait, because the next part is something that you probably have been doing wrong all this time. Let's talk about candle closures. In order to get a valid break of structure, we need a candle to open, but also close above a significant high or below a significant low. Remember, we don't even talk about insignificant highs and insignificant lows, just the significant highs and lows. Now, ICT and all other gurus probably tell you that a wick above a high or a wick below a low or a candle close above a high or below a low is enough to confirm a valid break of structure. But no, guys, we need a candle to open and close above a significant high or below a significant low to get a confirmed break of structure. Now let me show you guys some examples.
Let me go, baby. I've already stayed too long.
What we can see over here is that price on the 30-minute time frame closed above a significant high to break. We now know that this was a significant high because it brings us to a lower low over here compared to this low that brought us to this high, a significant high to break. You probably waited for the candle close above that high and entered right over here with your stop loss over here, targeting this high over here. A valid setup, you thought. But instead, you should have waited for the candle open and close above that high. Because what we can see is that the next candle, it closed beneath the high again, not confirming the break of structure, because we know that we need to wait for a candle open and close above that high, and the price got stopped out over here. It took out the low because people didn't wait for the correct confirmations. They only waited for one candle close above that high, but instead should have waited for this candle over here to open and close above that high as well, and only then they could have entered their long position, and now they got stopped out. Over here we are once again looking at a valid break of structure, but this time this candle closed above that high, and the next red candle, even though it closed in the red, that's completely irrelevant, it opened and closed above the significant high to break. Once again, guys, we know significant high because this high over here brings us to a lower low over here compared to this higher low that brought us to that higher high. So now we can start looking for longs over here, put our invalidation beneath the low, and we have ourselves a valid long trigger for the price of Bitcoin. And when we long the price, you can see that indeed the price held the low and started pushing towards the upside, because this time, guys, we were looking at a confirmed valid break of structure rather than a potential swing failure. I know I'm giving you hindsight examples right now, and I honestly hate myself for doing this, but I do know that I've gathered so much data on my trading system by executing it over the past 5 years that I know it's so important to always wait for candle opens and closures above significant highs or below significant lows rather than just wicks or candle closures. Trust me, guys, I know that you probably don't believe me right now, but if you do execute your system this way for the coming few months, I can promise you that it will improve your results. Before we move on to the most important part of this video, a lot of you guys are probably wondering, why is market structure so important? We all know that market structure is the core of every profitable trading system. It gives us triggers, confirmations, and also invalidations for our trading idea. But this is what most people are missing. Market structure is also a tool that smart money, aka the bigger players in this market, are using in order to engineer liquidity. Because they put certain market structure on a chart, they are trapping you into certain positions and therefore they're engineering a lot of liquidity. They use that liquidity in order to fill their own bigger buy and sell orders. Once you understand this, you stop trading like the majority of the market and you finally start trading with the institutions and the bigger players. Now we move on to the most important part of this video. Understand this very next concept and I promise you it will be the difference between you being a break-even trader and you being a profitable trader instead.
Yeah. And you say Shot City, Shot City, Shot City.
I'm coming home again. Do you think about me now and then?
Yeah.
Do you think about me now and then?
Did you know that Cape Town is one of the oldest trading ports? Speaking of trading, make sure to like and subscribe to not miss out on any of my trading related updates. We've talked about highs and lows to break, but let's take it a step deeper, guys. A market structure break carries a much higher significance if the low or the high that brings us to a significant high or low to break swept liquidity. Now, what do I mean by that? Let's say price forms an important liquidity pool over here and it starts pushing towards the upside. In my opinion, there's a very big difference between price over here getting a market structure break and price engineering that liquidity pool over here, pulling back, sweeping into that liquidity pool, and then getting a market structure break. Over here we can see that price swept liquidity, so this low that brought us to that high to break carries more significance. Now why is this so important? Because smart money needs this kind of liquidity in order to fill their orders. Over here smart money isn't able to fill all of their orders because there isn't enough liquidity available. The liquidity is resting beneath this low over here. Now, if they can fill their order over here, then form a lower high and then fill their orders one more time over here within this liquidity pool, then we are looking at a higher probability reversal play and a higher probability market structure break. Over here you can see one more time the difference between a valid but low probability market structure break and a valid but high probability market structure break. Even though that this low swept the liquidity, I want the low that brings us to that high to break to also sweep the liquidity. So I'm looking for prices sweep into the liquidity not one time. Now I'm looking for prices sweep into that liquidity one and then a second time over here. Over here we can see an example of a valid but low probability market structure break because there's not a major sweep of liquidity going on at all over here. All the price is doing is filling the inefficiency that we can see right over here. So it's a valid market structure break because the low over here that we break through brought us to a higher high over here compared to this high that brought us to this higher low, but it's a low probability market structure break due to the lack of liquidity sweeps. So if we would have entered a short over here on the price of Bitcoin with our invalidation above that high or maybe a pullback short position targeting this low over here, which is probably a short that many people entered, we can see that eventually the price would have stopped us out because we didn't know the difference between a high probability and also a low probability market structure break. This week I cut a major long position on CRV and it was based exactly off this principle. What we can see is the price made a strong push to the upside over here, putting in some low probability break of structures. Now we know that that is engineering liquidity beneath the low over here. Look how price makes an aggressive push into that liquidity pool. It sweeps the liquidity pool the first time, then forms a lower high, and then we get another sweep over here before getting that push towards the upside and getting a valid and high probability break of structure, making this a high probability invalidation and giving me a high probability trigger to enter a long trade. Now, before you guys don't believe me, as you can see over here, the exact trading signal has been provided to my community as always before the trade even got hit. Transparency for me is key and I never do hindsight trade recaps. And as we can see guys, based off those confirmations, our trade idea got filled, the low held, we formed a higher low before getting a major pump towards my final take profit target around 59 cents. So now you know why I believe that ICT and all other gurus have taught you the wrong way to look at market structure. But more importantly, I just showed you guys the right and correct way to look at market structure. Put this into practice and I promise you guys, your trading results will improve. If you guys do have any questions after watching today's video, feel free to drop all your questions in the comment section down below. And as always, I will make sure to answer all of the questions for you guys.